So, you want to invest in the future, right? In all that amazing tech and innovation, but picking individual stocks, that can be a real headache. Well, that's where two of the biggest names in the game come in, QQQ and VGT. Today, we're going to put these two heavyweights in the ring, head to head. We'll break down exactly how they work, what makes them different, and help you figure out which one might make more sense for you. All right, so here's our game plan. First, we'll look at the big idea behind each of these funds. Then we'll dive into what we're calling the blueprints for QQQ and VGT. After that, we'll put them side by side to see the real differences. And finally, we'll talk about how you can choose your own adventure. But hey, before we get going, just a super important heads up. This is all for informational and educational purposes, okay? This is not, and I repeat, not financial advice. You've got to consult a licensed pro before making any big moves. All right, let's do this. So, let's kick things off with a big question that really gets to the heart of why these funds even exist. I mean, how do you actually invest in the future of technology and innovation? It feels like a huge kind of overwhelming question, right? And that's exactly the problem that both QQQ and VGT were created to solve. They both want to give you a slice of that future, but, and this is the key part, they do it in very, very different ways. So a great way to think about them is like two different blueprints for building a tech-heavy portfolio. We're going to stick with that idea today. So let's grab the first blueprint off the table and see what it's all about. All right, first up is QQQ, and its blueprint, well, it's not for a single building. Think bigger. Think of it as the blueprint for a whole high-tech metropolis, a massive, sprawling city of innovation. So, what does that mean? Well, QQQ tracks the Nasdaq 100 index, and that gives you a piece of the 100 largest non-financial companies listed on the Nasdaq Stock Exchange. Now, here's the absolute crucial point. Its mission is to grab the biggest innovators on that exchange, not just companies from one single sector. That is a game-changing distinction. And this chart, it just shows that metropolis idea perfectly. Yeah. Tech is the biggest district, no doubt. It's like downtown, making up over 60%. But look at this. You've got these other huge, important neighborhoods like consumer services and healthcare. It's a whole ecosystem. And check out the top holdings here. You see the usual suspects, NVIDIA, Microsoft, Apple, and then boom, Amazon.com. And you might be thinking, wait a minute, Amazon is totally a tech company. But technically, because their main gig is retail, they get classified as consumer discretionary. This is a perfect example of QQQ's big city strategy in action. Okay, so that's the sprawling metropolis of QQQ. Now let's completely switch gears and check out VGT's blueprint. This one isn't a city, it's a single, massive, pure tech skyscraper. So VGT tracks a totally different index. Its goal is to follow the MSCI US Investable Market Information Technology Index. And what that means, in plain English, is that its mission is absolutely laser-focused. It's designed to own US companies that are exclusively in the information technology sector. That's it. Nothing else.
And I mean, this slide pretty much says it all, doesn't it? 100% information technology. VGT is what you'd call a tech purist. Every single penny is invested directly into the IT sector. No side neighborhoods, no other districts. Just the skyscraper. When you look at its top holdings, you see some overlap with QQQ for sure. But what's really fascinating is what's missing. Notice, no Amazon, no Google. Why? Because the super strict sector rules VGT has to follow mean they don't count as information technology. This is where that purist approach really makes a difference. All right, so we've seen the city and we've seen the skyscraper. Now it's time to put these two blueprints right next to each other and see how they really stack up. Okay, this table is awesome for a quick rundown. First thing you'll notice, VGT actually holds way more companies, like over 300 of them. And look at the expense ratio. It's cheaper, we'll get to that in a sec. But then check out the beta. Now, beta just measures volatility, and anything over 1 is considered more volatile than the market. Both are up there, but VGT is a little higher, meaning it's a bit of a wilder ride. QQQ's diverse city approach tames it just a little. And just to put a fine point on that cost difference, yeah, VGT's annual fee is half, literally half of what QQQ charges. Now, 0.1% might not sound like a lot, but trust me, over years and decades of investing, that difference can really add up. So you're probably wondering, has VGT's super focused, pure tech bet actually paid off? Well, looking back, the answer is yes. Over the past 10 years, its average annual return has been almost 3 percentage points higher than QQQ's. Now, you know the drill. Past performance is never a guarantee of future results, but that's a pretty interesting data point, isn't it? So really, this is what it all boils down to. It's the tech plus approach versus the tech purist approach. Do you want the broad innovators like Amazon and Google in your mix? Or do you want to invest exclusively in the IT sector, pure and simple?
And that brings us to the final chapter, choosing your adventure. Which of these blueprints fits your own goals? So let's think about this. Which blueprint might be the right one for you? And again, this is just to give you some context, to help you think it through for yourself. The QQQ Metropolis Blueprint. This one might be a fit if you want that exposure to innovation beyond just pure tech. If you believe that companies like Amazon are absolutely key to the future, and if you prefer something with a little less concentration and maybe a slightly smoother ride, QQQ could be your thing.
But if you're a tech purist and you want that super focused IT exposure, then the VGT skyscraper might be for you. If you're someone who really prioritizes lower annual fees, and if you're a long-term investor who's really trying to maximize returns, specifically from the tech sector, VGT is built for exactly that.
And that kind of leaves us with the big final question, right? Looking forward, what's going to be the bigger growth story in the next decade? Will it be pure tech, or will it be this broader definition of innovation, as technology keeps blending into literally every industry? It's a really fascinating thing to think about. The answer to that question will probably tell you which of these blueprints is right for you.